Here we have our last subsection, an amalgamation that covers everything we have learned today in one single study. All structural components: axis lines, trend channels, reverse use of trend lines, trend channels, the angle of ascent for momentum, horizontal, support and resistance, local levels, apex, etc. And as you can see, this is a very popular stock. It's Apple daily, spanning nearly 3 years, well, 30 months. And this is what my charts look like. This contains all of the structure. This study has been divided into 3 parts so we can zoom in and look closer at the structure and the price action. So let's begin the study. So we push up, then we see supply into here. As we break these lows, we draw resistance in, like so. Come down, we find support, we drive back up, we close here. Okay, not a lot to do here. That we come back up, we see another touch, then we come up. When we see 3 touches like this, 2 or 3, we need to draw this level in. Why? Because this level, as you can see, it's been respected 1, 2, 3, 4 times. So this level here is more important than this level. You can prune this off, but I kept it in so we can see the thought processes. So as we come down, we gap down, we don't make it all the way to support, we push up, we come down, then look at this, 1, 2, 3, and we have this one. So we draw this line in, and this was our main trading range, so this would be a local level of resistance, and this would be drawn in by the second touch because we can clearly see a price rejection. Okay, we can see we're making, on these 2 bars, we're making lower highs and lower lows. That's weakness at this level. Then we come down, and what a beautiful thing, we spring, gap up, demand imbalance, gap up, demand imbalance. Then what happens? We gap up more or less over this structure point. We do gap up, it just comes down to test. Fascinating. So from this spring, this fuels the market into higher highs. As we break this high on this bar, we draw in this trend channel because we have 1, 2, 3, 4, 5, 6, 7 touches. So we draw this channel in, like so. And what do we know about the break of this level? It's valid. We have a nice widespread closing firm. So we push up, look at this bar, touches the supply line, closes weak. So supply is entering where it should. That's interesting, it's been respected. And then over here, we try to move higher, we come into more supply, when we roll over, and then boom, look at this supply. Slams straight through our demand line. This breaks our demand line decisively. As we break the lows here, or support, either or, very close to each other, we have 1, 2, 3, 4, 5, 6, 7 touches. And what's good about this channel is we have a touch here at A, intervening at B, before we come back at C. So it's sharing the weight, and we have a nice triangle shape. And we can see that price is contained. So then we come down and we spring this level here. Now, would we take this spring? No. Why? Well, because we have supply to the left. We're in a downtrend, and we have this supply line that has been respected many times. We don't want to take a spring when we can see negativity behind us. We have supply line directly above. We have big supply to the left that breaks the demand line here. We see that price, or the buyers, are unable to test the supply line here. And when we do break, it's valid. It's a big, widespread bar. So we try to hold, and then boom, come down, and we find support. What happens? We gap up over this. Obviously, this was support, so now should be resistance. We gap up over resistance and the supply line. So we've gapped up over 2 areas of structure. Isn't that interesting? It's fascinating. So we gap up, and as we come down past here, as we break these lows, sorry, I would draw in resistance here. Come down, we spring, we've got another spring, gap up, unable to test our resistance as we come back down. You can draw this level in. Come down again, push up, and we get an up thrust of this local level. And then we gap down. And then we get a lovely wide spread down bar. Now, then the market gaps us up above another 2 levels. We gap up. This is a large gap. We gap up over this local resistance and this main resistance yet again. Fascinating. I mean, think about what's occurring here. Think about what is occurring. We up thrust, weakness. We gap down, weakness, and then we get a wide spread bar closing weak. Now we're thinking we should be testing. Don't forget this demand line isn't here as yet. We should be thinking we're testing here, here, or here. You know, we don't think we should reverse. We're not thinking in our minds we'll be reversing to close up above 2 resistance levels. So this move here traps traders and gets rid of weak longs. Think about this. For many traders will be short from this weakness. They're thinking we're going to test down here or down here. Yet it's reversed all the way back up. And look at this gap. I mean, this may look weak, but it isn't. If we draw in the tail, closes higher than 50% and also above this level. So this bar isn't weak. It's a huge demand imbalance. Okay, if we look at this negative, if we look at this bar like this, it may look negative, but it's far from negative. So this whole move here wrong foots the market. Now what's interesting here is that this is a spring and this is a test of a spring, and what do we note when we're under this support level? We gap here and we gap here. 2 very subtle demand imbalances. That gaps over, because both these bars close under this support, and yet both of them gap over support. So we can read that demand imbalance. Is this an up thrust we should take? Well, that's a different discussion, but traders will recognize this good selling down bar, and like I said, we would expect testing down, or we would expect lower prices of sorts. We gap up, strong buying, closes back above, and then we push our head against, making higher lows, and before eventually we break on this bar, what do we know? It gaps up over our local level of resistance. As we break this high, we would draw our channel in. Okay, got 1, 2 touches, 3, 4, 5 touches. So this is a valid channel. And then over here, because of this bar, we can draw in our main channel. We have 1, 2, 3, 4 touches. And what do we note about this trend channel? Lovely, got our first anchor point, our second anchor point, our third anchor point, and look, we've got the nice space between them in the middle, and we have our lovely triangle shape. So this is a nice channel as it's sharing the load of price action. So we push up, push up, push up, try to hold here, and then we break, and then it's instantly reversed on this bar, and we're trading back within the channel. So we become overbought, which is instantly, don't forget we're overbought because we're in an up channel and we're violating our supply line. Too much buying. And we can see that we come overbought. Why? Because look at this move. Remember the angle of ascent? We are moving too high, too fast, too soon. This kind of buying is unsustainable. So also, as we close back within our channel, we break the demand line from this micro channel. So this bar achieves a great deal. Price struggles here before eventually collapsing. So as we break down here, we can draw resistance from the highs. Then we come down, and what do we notice here? When we push up, we draw this level in, and that's a higher level of support, because we'd expect support to come in around here or around here. Okay, so this would be our area of support, but it comes in earlier. So when we have 1, 2, 3, 4, 5, 6 touches, we can draw a trend channel. What do we note about this trend channel? Well, the angle of ascent. It's weak compared to the previous drives. Push up here, look at the angle of ascent. Push up here, of an angle of ascent. Here, when we're pushing up, it's much, much less. Quality of buying isn't as good, and we can visually see the price action in here. It's choppy. Compared to the good strong selling, good strong buying up bars, and then here we just trade sideways, pumping up and down, and then look what happens. So we push up here, and we print this lovely bar, which is an up thrust or top reversal, which we must short. It's got everything going for it. We become way overbought in this channel. We hit our resistance level here, which reverses, and we become near overbought from our main channel. So we're at a supply confluence on 3 levels. And look at this bar. So we gap up, closes firm. We're thinking, okay, perhaps we're going to push into new highs. Then this bar pops its head above this local resistance, slams down to close weak over this structure and under this structure. This is telling us that supply has emerged. And where has it emerged? Where it should do. Overbought at resistance, near overbought from a main channel. Is this too much of a violation? No. Why? Because the second bar, this weakness, is reversed straight back inside. Okay? So we have to short this bar. And our target would be the demand line, which hits perfectly. And then we break a little lower. You draw this in. Technically a spring. Would you take it? Not after this weakness. No, I wouldn't. Even though we're technically in an uptrend, and springs do work better in uptrend, like we said, this is weak in comparison to the previous drives up. And then we push up to the supply line. Bang, we encounter selling again. And this time, what do we note? Well, we're unable to test this resistance level like we did here. I mean, this is a big violation, well, a violation. Then when we come to here, it's much smaller to be able to test this resistance, yet we can't. And we can see that sellers come in and they slam the market down once again. So the selling pressure is very evident on this bar. So supply is having more of an effect. Sellers are pressing the market. Then we come down, try to hold here, doesn't really go anywhere, and then we go sideways. As we push up here, I will draw this support level in. As we come down to here, I will draw this resistance. We come up, so come up, sideways, test, come down, try to hold. We see very poor buying, boom, slam down. We would also draw this 1, 2, 3, 4. So we've got 4 touches. What do we note? A, B, C. We've got a nice triangle. So this is a decent channel. So from here, weak buying, slam down, and we close weak at this level. What does this bar achieve? Well, we break the demand line from our major channel. We break this level of support, and we become oversold in this micro channel. So we have 3 levels of demand, and we break, boom, under this. So we're thinking, okay, good widespread, we should continue south to test lower prices. But no, the market has other ideas. Very next bar, we gap up, demand imbalance, and we close back within our channel and back above support. Very interesting. And then the following bar, we gap up and we hold our demand line. Isn't this fascinating? This is not coincidence. From here we hold the demand, another gap imbalance, push up, and then what happens? We gap up over our level of resistance. Fairly firm close, and we're thinking, okay, you know, perhaps we might be able to break into new highs here. But then this bar doesn't really tell us a great deal, but there's no upside follow through, and then boom, we gap down through our area. Now see, this is very interesting behavior from these 2 bars. It's remarkable. All this action wrong foots the market, or you know, it doesn't give an opportunity to jump on board. It's saving the best move to last, which will be this gap down. Think about this. We spring here with a gap imbalance. We gap up above our demand line. We have another gap. We gap up again, so we're driving higher. We gap up over this level, local level of resistance, and people think we're going to break into new highs from here. And the psychology of the market is they feel as if they're missing out. This is a strong move. There's demand imbalances all over the place. They want some of the action. So you know, there's a bit of a buying frenzy here, and then all of a sudden, boom, gaps down through support and back within the channel. So again, 2 areas of structure. It's phenomenal. It really truly is. And if for those who trade patterns or something, I think this is called an island. This kind of price action is called an island. You know, you gap up, you have 2, 3 bars, and then we gap down, and then this will be the island, and all this white space is the water. I don't concern myself with these kinds of thought processes or patterns, but I thought I'd share nonetheless. So then we come down, so we gap down, and look at these weak buying bars. Looks like no demand. Now we need to go to the next chart. This was our no demand bar, and then boom, we break support with good price action, a solid bar. As we note, we have our original anchor point up here, then we have another 1, 2, 3. So as we break this low here, we can draw in this channel. And then we bounce around here, respected, 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 respected. And then boom, look what happens. This bar is monumental. It is a huge spread, probably 2-3 times the size of any spread that we have on our chart. Yet what happens? We slam down, break our demand line, and rally back up to close back inside. I mean that is a uncanny bar. It's unbelievable, truly is. But due to the size of this spread, we know it must be data driven, earnings or something of the like, and it's probably very negative news. So it's very negative news, and when it comes out, all the public or all the retail sell, but then all down here is clever buying from the professionals. They accumulate a lot of contracts here. Think about that price. It's nearly a 10-point range, okay, a 12-point range, where they're accumulating all this stock. So as the fear kicks in, they're buying. Simple as that. And we know that. We know that for a fact. The close back inside, all this is demand. Okay? So we drive down, reverse to close firm back inside the channel. Then we push up. We have a mild violation here, and then we gap down and trade back within this channel if we should draw this along. But we find support. So as we rally past here, I would draw this level in. Then we gap up. Okay. And then it's instantly met with negativity. And then we have 1 touch, 2 touch, 3 touches. This contains price, and this is our local level of resistance. And then we drive down, and then we hold here. As we drive back up and test here and come back down, this level will be drawn in, but I wouldn't be thinking anything too much of this little level here. But I do note that we break this little level with a wide spread, closing weak. So it kind of validates it. So this is 2 touches. And then we come back to support and we hold. Buying, good buying. Touch, 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 touch. We have a lovely trend channel. A, B, C. Nice triangle. So it's an upside with multiple touches. We struggle to push up here, as you can see, but we do. And what do we note? We note we get another strong break through this area. So that's 1 touch and 2 strong moves. Again, it doesn't really come into play, but I would note this action. So from the supply line, we drive up into new highs. As we break this high, I would draw in this level from this anchor point, this anchor point, and this anchor point. But what do we note? It's not the best channel in the world because it doesn't share the load, and ideally we'd want touch, touch, touch. Get the nice triangle, but we don't. But we still have to draw the channel because that's what price tells us to do. We come up to resistance here, horizontal resistance, and we hold. We manage to break through, selling off the highs, followed by negativity as we become overbought in this micro channel. Then as we come back down under, close under the resistance, we can short here because we're overbought. Supply did come in where it should do, and then we're holding, closing under resistance. So this action combined is an upthrust. And then what do we note? We break the demand line with a gap. Yet again, an area of structure. This is not coincidence. And then we fall down. This bar closes weak, widespread. We're accelerating towards this area, but still this is our main area we'll be thinking of. And then dips down under to reverse and close firm. Now this area becomes of interest. Now I'm thinking this is fairly important. Why? Touch, valid break, widespread, valid break. You come down, accelerate here on this bar, yet this bar reverses this action to close firm. So this level is becoming important. It acts as a support, now resistance, resistance, valid break, and now support. Do we have an axis line forming? We don't know. Again, I wouldn't trade this. This action here is untradeable because our story is we upthrust, gap down through our demand line. We have accelerating price action towards this level, but as I said, this is our main level. But the fact we reverse here, it is a trade, but it's not a trade that I would take. So we drive up, and then what do we know? Look, close off the highs indicates some selling, and then 1, 2, 3 touches. So as we come down past here, and this move here, this will be drawn in. And as we rally back up, it's respected. And we drive down. We try to hold here, we dip under, reverse to close firm like a spring, but it's instantly met with more supply. We try again, yet we can't muster enough force to close back above this level. And then again, it's instantly met with selling. So we come down to support. Dip under, tries to hold again, gaps down, boom, we end up breaking. So as we break this low here, we have 1, 2, 3, 4 touches. So we have A, B, C. Again, not the best channel, but it would be drawn. It is a triangle, but we ideally like touch here, and a touch here to get the nice, to share the load of weight, to share price action. Anyhow, so we come down, we respect it, come down, become oversold because we're in a down channel and selling. What happens? We become oversold, we halt, we go sideways. Then what happens? Gap over our supply line to then reverse and gap back down. Amazing. Isn't this just fascinating? It truly is fascinating. Price goes sideways from here. We come down, we find support. As we rally up, we draw this level in. Come here, come down, come back. As we come down, we draw this. That's 2 touches. So we have a mini trading range. So from our mini trading range, we gap up, and what's this? This is a lovely up thrust. Pops its head above this bar, reverses to close weak, wipes out this kind of buying. And this is a trade that we could take. However, it doesn't really go anywhere. When we come down here and we see this reversal action, if we're not out already, we'd have to be out by here. We'd have to exit via this bar. So from the lows, we drive up hard. Note the price action, wide spread, closing firm. From the high, we react. As we come down or break here, I will draw this level of resistance. What happens? We gap over. Again, not coincidence. However, I must disclose that this would be our original trend channel. It doesn't really serve us. So as this price action holds or stalls and goes sideways and then moves up here, it would be adjusted as so. So we gap up, come back down. Now what happens? That is negativity. We close off the highs. So now, as this was support, resistance, support, acts as resistance here, as we can't close back above it. So as we come back, we'd expect it to act as resistance. We come down, we attempt again, acts as resistance, and look at this kind of price action. Beautiful. What happens? Well, we have an area of confluence. We have this line acting as resistance and our major channel A, which is all the way back there. Sorry, I can't show it on the chart. This would be B and this would be C. So this would be our channel. And when we come back to revisit here, we note supply, and very good supply that is reversed back inside the channel. Isn't that phenomenal? That's a must short. We have to short this bar. Everything is saying weakness. Think about this bar right here. We break the demand line, weakness. We see selling at the supply line and this resistance. We come down, we hold a little local level, we try to hold, so we weaken the demand line here, but it's weakened. We push up, cannot break the highs here. So this is resistance, blue resistance. We come violate our major channel, can't go anywhere, see selling, and this breaks and we're trading back within the channel. This is a must trade. And then we gap down and we close under this level, which will be drawn because we've got 1, 2, 3 touches. We come back to support. Amazing. And what happens? They gap it lower at support. I mean, look at all this action. Gap over structure, gap over structure. Try to gap over structure. We can't see the full workings of the bar. We could have gapped here, come down and then gone up. And then we gap over structure. Not coincidence. So this bar is a high odds setup, trigger bar to the downside. We have 1, 2, 3 local resistance. We close back under our axis line. And we dip our heads above, come back, reverse, and we're trading back inside our main channel, followed by a supply imbalance. This is very, very good trading. This is how we use structure and negative price action This is what we want to do. These are high odds trades. Not only that, look at this gap here. We gap past this level of support and here. Yes, this closes down, but this could have gapped down to here and then reversed to close flat. So again, we gap two areas of structure, not coincidence. So we come down, we hold here and here, try to rally, hold, doesn't happen, and we break. Fairly good spread closing week. Might have lower prices on the cards, but gap up, close back above this support where we saw buying in a big way over here, and then price stall here. So this is a very good spring. So we spring here at support. Let's go to the next chart. This is the potential spring where we left off from the previous chart. When we drive higher, as we react, we will draw this level of resistance. And then we push up, break these highs, and then reverse to close weak. What is that? That is an up thrust, and we would take that trade. As we break these lows here, we would draw in this high. Now these are very close together, but it is a daily time frame. They would be, both levels would be drawn. And we come down, we gap down, and then we find support here. Drive it back up to resistance, test, it holds, it comes back down. Now this is very, very interesting behavior. They push it up here. They gap it up here over 3 levels. This resistance level, this resistance level, and this is the supply line from our main channel, and it's gapped up over 3 areas of supply. This is not coincidence. It can't be. It's happening too frequently. This chart is riddled with gaps over structure. Don't miss the point. You know, I'm not hung up upon the idea that the markets are manipulated. That's okay, no problem. It doesn't concern me. What we need, or what I take from this, is that well-funded professionals, the big players, are aware of structure. They understand structure. Therefore, that makes me want to understand structure and use structure correctly. Structure, hopefully by now, you're beginning to understand that structure is an extremely potent tool once fully understood and applicated into your day-to-day trading. Anyhow, so from the gap up, we continue north, come back down, and we hold just above support. As we break this high, then I would add this channel. So we've got 1, 2, 3, 4, 5 as in containment, 6, 7 touches. You may have a simple demand line in from here, but I wouldn't be drawing the parallels as yet. You want to see a break of this high. Okay, so from here we push up, good price action, breaking the axis line, and then what happens? We become overbought in this channel. Price is struggling, so we know this area of structure is working, and we react down, up, down, up, down, up, holding our axis. Our axis line is now holding a support, as it should do, as we get a valid break, and we form an apex. Fascinating, huh? And as we are holding at support and making high lows here, we'd expect a break to the upside, and we do push up, and then we find negativity. We see supply come in. Where are we? Overbought in the same channel. And this selling should not occur this close to an apex. Granted, there isn't a great deal of cause, but still this kind of selling indicates that this is more or less a fake break. This shouldn't occur. We should take off. But here we encounter selling in an overbought position. Then we trade sideways and we gap down. Try to hold, but we follow through to the downside, testing the axis line, try to hold, and again we come down. Now, at this point, I would draw a reverse use of trend line. We have 1, 2 touches, and this is 3 and 4. There's 2 touches here, 1, 2. And this is a reverse use of trend channel because the resistance is being drawn first in an uptrend because we're making higher prices. As we break this axis line, I would note, or I wouldn't note, I would draw this level in. I would not have a strong faith in this channel, but it would be drawn nonetheless. Then as we get to here, we have 1, 2, 3, 4, 5 touches. So this channel would be drawn. And then we continue south, respecting all the way down. And then we become oversold in our down channel. Happens to be near the demand line. Again, I wouldn't have faith, but it would be drawn in. And we can see a close off the lows. And we'd also have this level, because this was once resistance and now should be support, support, support. And we are near this support, oversold, and at this demand level. This is not a trade, but I would be aware that demand is coming in. And then we break the supply line with a valid break good price action. We come up to axis line. What should happen? Well, support, valid break should now be resistance. Here it was. Resistance here, resistance here. We come back down, not that far, and then we rally back up. As we break this high, A, B, C. Not the cleanest channel, but the triangle isn't that bad, as you can see. So it's a valid working trend channel nonetheless. Now as we push higher, what do we note? 1, 2, 3 clean touches. So we could draw this level, which is a reverse use of trend line. That means that demand, there's not enough demand in the market to touch the supply line, which is here, or that sellers are pressing the market. However, there is another reverse use of trend line in play. We have 1, 2, 3 touches here. So it tightens. So look how far away we are now. So you can visually see that price is coiling. Can you see this? This is building cause like an apex over here. But this is causing build to the upside. Then we break above this level of resistance. Not that convincingly. And we come down and we just get, these bars are nothing. They don't really tell us a great deal apart from there's not a lot of trading, and also that this demand line has been well respected. And boom. Amazing. Look at this gap. Fantastic. Gaps over resistance here. Our main supply line and the supply line from this channel. It gaps up over here, then we dip down, reverse, and then we close like this. Don't forget that this supply line here is 1, 2, 3, 4, 5, 6, 7, 8 months old. It's 8 months old it's held for in a nice working channel. By this point, we see this hold, we have faith in this main channel. This highly validates the use of this channel. And what do? They gap it up over. Basically, why I like to say coincidence is that hopefully it should hammer home that you want to become masters of structure, because the professionals are masters of structure and we want to trade with them, certainly not against them, because we'll never win. We want to see what they see. This concludes our amalgamation study for Apple, and I hope you get a lot from this study. Not only how to read structure and how to applicate structure in the various tools we have within structure, axis lines, trend channels, etc. But importantly, that professionals understand and use structure. I know I'm repeating myself, but they gap it over vital areas, and this tells us that they're using it because it traps traders. So if they are using structure, we need to use structure. I cannot emphasize this point strong enough. It is extremely important, and this is the foundation of our trading. Structure is the foundation. As I said, price adheres to structure. It's contained within structure, and structure is where we look for trade opportunities. Structure combined with price bars and volume, as we will explore next week, you will see that our methodology is second to none. It truly is powerful way to trade. And I do realize that we've overran by a couple of hours, and I sincerely apologize, but I want to give you the best grounding I can possibly give. And structure, as I said, is the foundation. If we don't build the foundations correctly, we're not going to be able to locate trades or exit trades correctly. This is why structure is important, and the gaps on this study should hopefully highlight that professionals watch it, so we need to watch and apply structure correctly. Good. Are there any questions? What levels do you keep on? Okay, good question. Let's go back to a full picture of structure. What levels do I keep on the chart will be major support and resistance lines and axis lines. Like this here is fairly good. Support line. Support, valid break, resistance, holds, and then we gap through. So if we come back down in the future at some point, this is an area that may provide potential demand. Okay, well, it's a good question. This reminds me, in fact, a few weeks back I was one-on-one mentoring, and this trader said that trend channels in a sense are single serving friends, as in they are only of real genuine use when you are trading inside them, when price is contained. So when we're trading in here, and then we can see we're overbought or we become violated down here, it's of use, it's of genuine use now. But when we go into the future and we're trading here or we come back down, this over here is nothing. It does not, it's irrelevant. Whereas, so this is a single serving friend in the moment, is a good way to think about it. Whereas this line may provide potential, well, odds favor some kind of buying at this level at some point in the future if we get down to this level. Okay, good question. What levels do you keep on? Okay, good question. Let's go back to a full picture of structure. What levels do I keep on the chart will be major support and resistance lines and axis lines. Like this here is fairly good. Support line. Support, valid break, resistance, holds, and then we gap through. So if we come back down in the future at some point, this is an area that may provide potential demand. It's a good question. This reminds me, in fact, a few weeks back I was one-on-one mentoring, and this trader said that trend channels in a sense are single serving friends, as in they are only of real genuine use when you are trading inside them, when price is contained. So when we're trading in here and then we can see we're overbought or we become violated down here, it's of genuine use now. But when we go into the future and we're trading here or we come back down, this over here is nothing. It does not, it's irrelevant. Whereas, So this is a single serving friend in the moment, is a good way to think about it. Whereas this line may provide potential, well, odds favour some kind of buying at this level at some point in the future if we get down to this level. Okay, good question. Are there any further questions before we summarise today's session? It's gone very quiet out there. I do apologise, we have overran by 2 and a bit hours. Feel free to send in any further questions if and when they arrive to you. So let's crack on. Structure. Let's just summarise what we've done today. Structure can give direction in a visual manner by the mere use of a trend channel or trend line. High highs or high lows or lows or lower highs, as we should know by now. Okay, we can just see that trend is up. It can help with sentiment in terms of strength or weakness. Now, if we break 3 levels of support decisively, we know not to look for long plays or until the market tells us otherwise. So what this does really, in a sense, is it keeps us safe. If we're looking for springs trades, or we think a spring trade's forming up and the first 3 levels of support have broken, we don't really want to take this route. We would want further confirmation, so it keeps us safe from taking long plays. Okay, and we can determine whether the market is in a potential overbought or oversold condition. A pullback or rally is expected. And of course, this is when this may lead to a potential reversal scenario, which is very powerful. So if we're on an uptrend and we come up and we become overbought, okay, and then odds favour, if we come overbought, we should test the demand line. Now, if we have a trend that is long in the tooth, we become overbought, and then we come down and we break our demand line here decisively, and then we rally back up, there may be a short opportunity here or here, as we went through previously. Now, this is very important and very powerful because this has the potential to be reversal, and we are catching it right at the infancy, which means we have very large potential gains if we trade it correctly and the market unfolds in our favor. Okay, and we use structure to lean against for entry and exit purposes, which we've spoken about throughout this whole course. The structure provides targets in a trade. For example, if we're in a trading range and we're long from support, our first target would be resistance. Same applies to channels. If we come down, so we come down, touch, come down here, say we have this supply confluence, we touch here, we sell as it trades back within the channel, our first target would be down here. That's it. It's very useful to use structure for our entries and targets. And we have a universal application that can be used on any time frame within any market. Now, today I have been using a lot of Wyckofian, VSA and price action principles, which we will go through in the rest of our course. However, that's not to say that structure, in the way that we use it, does not work with other methodologies. Far from it. Structure is structure. What do I mean by that? Well, for example, if you momentum based trading, or you like to look at Bollinger Bands or RSI, and you like to see when we're overbought, and you can, so if you have an uptrend channel and you note we become overbought, using structure and price, we can just see we become overbought, and also on your indicator, your RSI, whatever you use, we also become overbought, then you have another valid reason to short. It helps to filter and may help you to pull the trigger. I have yet to see a methodology that isn't aided by structure. I think it enhances most methodologies that I've come across. And again, I can't stress this, you can only gain belief and confidence in yourself and your abilities by practicing. But you need to practice structure. You need to draw on your charts. 20 minutes a day is fine. You will have an edge that most traders will not have. When we construct structural elements, we use a best fit approach. We look for multiple touches and price containment, no violations. Well, what I mean by no violations is we like violations to trade. If we're in a channel like this, we don't want to see price down here and then down here and then here and up. You know, this is just, it's too much. It's violated too much. We need a best fit approach. Hopefully by now you should use some common sense. And also, if we hold a high level of support, it has the potential to be additional strength. So if we're in the training range, we're bouncing up and down, we come up and we hold here. This little local level suggests that buyers are coming in earlier, supporting the market, or there's no selling pressure to drive it down. So therefore this can be construed as additional strength, and we break to the upside. And the same goes to the downside. If we come up, come down, come up, come down, and we hold, and then we fall, because we can't rally. Okay? And local support and resistance is a subtle nuance. It's highly effective in an intraday environment. It is. Again, draw, practice all these structural elements, and you will see them for yourself. So I'd like to thank you very much for joining me today. Again, I sincerely apologise for overrunning near 2.5 hours now. Feel free to send in any further questions. I hope you get a great deal from structure, and you're beginning to understand its power and its use, and how it's the foundation of our trading methodology. Thank you very much. No problem. And we shall meet next week at the same time. Thank you. Take care now.